People's memories are very, very short, but that's not necessarily a good thing. I am very happy to be as old as I am, having lived through what I lived through, because, history does indeed have a tendency to repeat itself. So I'm going to take you down memory lane a little bit, but then I'm going to bring you full circle and current, because the issue in the banking system is not just a couple of little banks in the US or even a big bank like Credit Suisse. But you need to know that this is all just the tip of the iceberg. Coming up. I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer. But really, it's like when you study history, and it can be long history, it can be short history, but there are lessons in there. And somehow we never really seem to learn. So I'm going to start with an itty-bitty movement down memory lane. And it's actually almost in 2008, almost to the day, March 16th, 2008. 8. Bear Stearns' number one foe is fear itself. Look, its fundamentals are intact. But after all, if you lose confidence in them, and we are living through another confidence crisis right now, then it can't survive. And that was, almost to the day, March 16, 2008. The struggling brokerage firm spent Friday trying to assure fearful investors that it isn't on the brink of insolvency. Look, we have now been transitioned into a no reserve requirement agenda. And who's going to set those reserves up when the bank fails? Well, we've just seen that with SVB and all of that. But who steps in? JP Morgan to buy Bear Stearns for $2 a share. Also gave them a lot of control over the silver market and gold market, but primarily silver because of all of the derivatives that Bear Stearns bought or brought to the table. JP Morgan Chase said Sunday it will acquire rival Bear Stearns in a deal valued at $236.2 million. A stunning collapse for one of the world's largest investment banks. Couldn't we just put any bank that just recently failed name on there? Isn't this like the same kind of thing? Of course it is. And that was on the same day that Bear Stearns said, oh, no, we're okay, we're fine. Yeah, well, didn't we just see that as well? Bernanke, who was the then Fed chair, defends that Bear Stearns bailout. Because this was the question, who let our financial system become so fragile that one failure jeopardizes the health of the entire system? Isn't that what we just heard? So isn't this just history repeating itself? And I'm wondering when it will become apparent to the public. I mean, this happened in March 2008, and it wasn't until September. This is the piece that happened, but really the whole thing started to unravel in 2007. So it happens slowly until it happens quickly. Are we going to see a repeat in September or sooner? I don't know. But there's an interesting thing that's really happening. U.S. debt shed by central banks since 2014 as the dollar needs rise. Remember, we've talked about the issuance of dollar-denominated bonds in other countries that don't work for or issue dollars. So this has helped create this artificial demand for dollars, but it can also be a problem. In order to raise money as banking stress shakes the market, foreign central banks sold their treasury assets at the fastest rate in 9 years and used a crucial Federal Reserve facility. So remember, if they're selling, right, then normally you would see interest rates rise. But you also have the Fed and other entities buying the treasury debt at the same time. According to Fed data, foreign government holdings of treasury securities decreased by $76 billion to $286 billion. Wow, that's a lot, $2.86 billion in the week ending March 22nd. Since March 14th, that is the greatest weekly drop. Data show that at the same time, a record $60 billion was drawn from the freshly established Foreign and International Monetary Authority. So what does this mean? This means that all that tightening went bupkis because the Fed turned around and created a whole bunch of dollars for foreign central banks so that they could then give them to the foreign currency, the foreign corporations that issued dollar-denominated bonds. Right? It's just it's a shell game, right? Look over here. Don't look at what's happening over here. But I'm hoping that what you see is that we are at the end of this life cycle. And they are between a rock and a hard place, which I've been saying for quite some time, but it's simply a fact. So, the greatest weekly drop since 2014. At the same time, a record $60 billion was drawn from the freshly established Foreign and International Monetary Authorities, or FEMA, renewal fees facility of the U.S. Central Bank, dwarfing the peak of $1.4 billion reached at the height of the pandemic. And this was $60 billion versus $1.4 billion? I don't know. You tell me. If the banking system on a global basis is as strong as they want you to think it is, why is everybody, whether it's in the U.S. or in Europe, having to draw upon these newly revised and all these, the banking system, they want you to believe that they are in control, that everything is okay, nothing to see here, move on. But every time there's a crisis, there is also a consolidation of power. And that makes those that are too big to fail kind of like too big to bail. So in Credit Suisse's case, UBS bought them in a $3.3 billion deal. And this is all about ending the crisis, just like we saw JP Morgan buy Bear Stearns. Did that end the crisis? No, it did not. Is this ending the crisis, or the two buyouts in the local banks in the U.S., SVB, etc.? No, it does not. All you're seeing is the tip of the iceberg, but it's all that danger that's hidden that you can't see, all those derivatives that you can't see. Remember, banks in this country spent $180 trillion so that it only looks like there are $185 trillion in derivatives out there. What is that telling you? That is hiding massive amounts of icebergs underneath. It's danger. Okay, the Swiss bank is paying 3 billion francs for its rival in an all-share deal, so they don't even have to come up with money, that includes extensive government guarantees, just like with JP Morgan and Bear Stearns, and liquidity provisions. So you do this, you buy them, then everybody is going to think everything is hunky-dory, but the government, who is backstopped by the taxpayer, is giving you extensive government guarantees and liquidity provisions. The price per share marked a 99% decline from Credit Suisse's peak in 2007. Bargain. They leave the garbage with the insurance, like in this country, it's the FDIC, And then the buying bank siphons off anything that's of value. But it also creates consolidated power. So now, instead of there being two large banks in Switzerland, there's only one, UBS. And that means that UBS is pretty dangerous right now. But don't worry, they left all the garbage derivatives. Maybe they did with their deposit insurance scheme. Now, they also did, there are a lot of things to unpack with this, and a lot of things about truth to unpack with this. Credit Suisse bondholders prepare lawsuit after contentious $17 billion write-down. So you remember on this reach for yield where they were taking away those covenants. So covenant light, we've talked about this so many times, covenant light. And people didn't even bother to look because Switzerland used to be a negative rate. So let's risk our principal for that little bit of yield, because that sure makes a whole lot of sense, doesn't it? No, I've talked to you about this before too. But they're paying me 5%, but you're risking 100%. And that's what happened to these bondholders. But people also were thinking that, and they came out and said it shortly before this happened, Credit Suisse did, that the bondholders were senior to stockholders. However, that's not really what ended up happening. In reality, they changed the law on Sunday to allow FINMA to write down the AT1s, so the bonds, without any constraint. Governments get to do that. If a government says this is money, heck, they can say, nope, no longer money. There's over 4,800 currencies that do not exist anymore. But can the government do that with this? No, it cannot. Okay, there's a huge difference between something that has massive functionality and has been classified as money for thousands and thousands of years versus this little bit of fiat money that doesn't really last all that long. So don't be blinded by the interest that the banks or the Fed is willing to pay to attract wealth to it. Do not risk your principal. Gold does not have to pay you interest, neither does physical silver. They don't have to pay you interest because when you hold it, you own it. Seriously. Okay, of course, there is a degree of flexibility in the prospectuses, but if they change the law on Sunday, it's because they didn't have enough flexibility to write down the AT1s to zero. So what does that really tell you besides if you don't hold it, you don't own it? What that should be telling you is that they will change the rules to enable whatever they think is in their best interest. You are not too big to fail. Now, if we all come together and make a stand and vote with our wallets, then we have some level of control. We can take back that control. But this is who I really want to talk about. And that's Deutsche Bank. Deutsche Bank has been in trouble many, many times. And at one time, not that long ago, the International Monetary Fund, the IMF, named them the most dangerous bank because of their extremely high and leveraged derivative positions. Has that changed? No. They've just consolidated that so it doesn't look like it's as bad as it is. But do you trust them? Because if you do, I have this bridge in Brooklyn that I'd really like to sell you, except that my integrity wouldn't let me do it. You know, when I first became, I'm going to just kind of move on here for a second and tell you a little story, but when I first became a stockbroker at Shearson, I started my career working with government bonds. And the reason why I chose government bonds was because I figured that I couldn't burn anybody that way. This was about interest rates. If the government needed to repay you, they could simply turn on the printing presses and repay that debt, right? So I figured I couldn't burn anybody. So that is actually why I began my career. It's all about debt, and it's all about interest rates, and it's also all about currencies. Now, that wasn't really true. It was more true then because we were at the beginning of the most current debt-based system. But I can say that about gold because gold has the broadest base of buyer. And it's been money for 6,000 years. So if you buy gold, you might have to have some patience because of the manipulation, but you can't get burned unless you choose to sell it at the wrong time. This is the time to be accumulating physical gold, physical silver. You can't get burned. You hold it, you own it outright. It's critically important in this garbage scenario that we're really looking at, and it should be obvious to everybody. Okay, so Deutsche Bank drops in sell-off, Citi describes as irrational. Gee, didn't we just hear that right before Bear Stearns went out? This is not, we're fine. We're fiscally sound, except they don't have to hold any reserves, and they do hold a whole lot of leverage. All of these large banks do, period. It's the business model based on ZIRP, zero interest rate policy. And I don't know, a blind monkey could have seen what was going to happen if you turn on these printing presses like crazy, that at some point the inflation that was contained in the markets is going to come out. And then what do? Only way to fight inflation is with deflation. And so the Feds and global central banks raise the interest rates. But yeah, latest bout of stress comes days after Credit Suisse rescue. And the financial sector suffering widespread share price decline because of a loss of confidence in the system. So my question to you is, do you have concerns about the global banking system? Because it is, I've shown you this ad nauseum, incestuously intertwined. And it doesn't matter where it starts. I'm telling you, fires are going off. Fires that we cannot see in those derivative contracts where most of them are based upon interest rates. We can't see it until it's too late to do anything about it. But this should be a wake-up call to you. And they were talking about those bonds being written down completely where stockholders, they were okay, right? So they changed the order of seniority. But guess when this is from? 2016. So, who could have seen this? It's crazy. They act like, that was yesterday. This is today. It's different. It's never different. CoCo bonds, which are the convertible contingent bonds. I did something on this way back when. I had this in my file on charts that I pulled back in 2016. So you can see them declining. This was 2019. So this issue and the CoCo bonds, those contingent convertible bonds that are designed to be bailed in a crisis, when they drop, that is showing that confidence is lost. And Deutsche Bank has been on our radar and on the verge so many times. Have they really fixed anything? No. But what they did do was inspire more CoCo bonds, and that was just when? 2021. Where are we now? 2023. So not even 2 years ago. The German lender's sale of the riskiest type of debt has attracted lots of interest in that zero interest rate policy. Don't bother to read the prospectus. No, just risk your capital, your principal, for a little bit of interest, because what were these bonds paying? 5%. You're taking risk of 100% of your principal for a little 5%? Well, yeah, if you don't understand this stuff and you're in a zero interest rate policy environment and you have the need for income, guess what? The strategy is based on your need for income. And it deals with that without putting your principal at risk and recouping any principal that you use. So if you haven't done this yet, click that Calendly link below, set up a time to meet with one of our specialists, put your own strategy together. Don't risk your principal for a little bit of interest. And the reality is the more that they do this, and this is the only tool they have left, the less value whatever's already out there has. And you know that through inflation. So the central banks set this up. Then they raised interest rates. They didn't stay at ZIRP. Did they not know that this was going to undermine the portfolios of every frickin' bank on the planet? These are supposed to be the brightest guys. I think they did know it. I think they knew it when they were putting us into position. I think they knew it when they were forced to change position. And I think they know it with SOFR coming and that transition from LIBOR to SOFR coming up. And the shares plunge. And that default insurance, which now they're saying, oh, this is way too opaque. The powers that be over in Europe, oh, these CDSs, oh, they're way too opaque. Oh my gosh. The default insurance, which is a derivative, is the highest that it's been since 2018. Credit default swap is a derivative that indicates market confidence in the banks. This is Credit Suisse. Now, of course, what value do they have? Because Credit Suisse has been marked down completely. And they don't know quite how everything is going to be paid off either, by the way. Default swaps on the bank's euro senior debt surged to the highest since they were introduced in what year? 2019. Isn't that interesting? And here it is. Now it's a little bit higher than it was back in October of 2022, but you can see the direction that they're headed in, as are all of these key banks. This is Deutsche, there's Credit Suisse is the red, Soc Gen by senior CDS is the blue, so that's up, and UniCredit. The banking system falling apart on a global basis, absolutely. Come on, let's go to the next one. Deutsche Bank, but don't worry. Deutsche Bank's junior bond rises after early repayment announced. So they're rushing into the market to tell you, don't worry, we're fine. And in fact, we're going to repay some higher level tier bonds because we're going to show you that you can count on us, that we are solvent and we are secure, even as the cost to insure these things have risen sharply. And there you go. It jumps after they said, well, we're going to call this bond in. But here's the problem. While pricing has recovered in recent days, it was still indicated at a level about 94. That's 94 cents on the dollar. That suggested a significant probability of Deutsche Bank skipping its call option. So they're just saying that they're going to buy it back, but the market doesn't fully believe them. They believe them enough to rise, but not to 100%. So the market, this is a crisis of confidence. And I've told you this so many times. In a con game, confidence is required. And once confidence is lost, it's really hard to get back. And the last level of confidence out there is the public confidence in the system, in the central banks, in the governments, in the banks themselves. And this is showing you the markets do not have confidence in it. But they'll do what they've got to do. And here's Bolivia's financial woes deepen as Moody cuts its debt rating and the gold bill stalls. So what Bolivia wanted to do was sell off some of its gold holdings. Gold is your safety net, not the government raising interest rates into a failing currency. Not them coming out and every other word telling you how safe the banks are when the FDIC resolution board doesn't even think that they are safe. Do you get that? They don't think they're safe, but you're supposed to think they're safe, so you leave your wealth exposed. I'm not quite sure how you feel about that, but I know I'm not good with that. In gold and silver, I trust. Physical, in my possession, because I hold it and I own it. And you can see, even as this financial woes deepen, etc., they can suppress the price. And they talk about that. They can artificially raise what you see as the value of their currency, and they can artificially suppress, because they can make as much paper gold, digital gold as they want. That's nothing. That's easy peasy. That's not even expensive. But in the physical world, finite amounts. Outside, gold held at home is outside government control. All they can do is use these tools to manage your perception so that you move forward in a way that supports them. But I'm suggesting that you move forward in a way that actually supports your best interest first. That's why I tell you, don't take my word for it. Don't take the FDIC or Yellen or any of these guys. Don't take their word for it, because they are lying to you. That is their job. Their job is not to protect you. Their job is to keep you calm in the system. Because when you lose access to your wealth, or your wealth declines, your fiat money wealth declines, who are you gonna complain to? Everything is unfolding now. Not a big surprise. Here we are in 2023. Now, do I think it's going to be over by the end of 2023? No, I do not. I think the worst, or the bad part of it, the obviously bad part of it, has begun. And not a surprise, I've been saying all year, there's got to be a crisis before we hit June. So, and that's only because the powers that be gave me a date. I never give dates. I don't know when things are going to happen. I mean, I can't tell you something's going to implode Tuesday morning at 8:35, but it certainly could. And I'm not going to know it 1 second before you know it, because I'm not privy to any information that you aren't, or anybody else is. That's why I publish all the links. Do your own due diligence. Don't take anybody's word for it. But it's too silent on that end, and they don't believe they can do it. So if you haven't yet, then you want to make sure for Thursday's deep dive video, and tune in tomorrow for our live Q&A, and also make sure that you visit our Spanish channel. Go in, give it a try. It's in English and Spanish. I'm definitely not fluent in Spanish. I'm definitely not. So, you have both. But what I like about it for my non-Spanish speaking viewers is that it's small and there's just a few questions that we address. So I think that it's easier to share with non-believers, and that might inspire them to look more deeply in it so that they can help you. I can tell you that in the past, I've been very frustrated because I feel like I have to carry everybody. So I know your frustration. I'm used to people thinking I'm nutty. I'm the youngest of 7. They always thought I was crazy. Doesn't really matter to me, but I know how that feels for everybody. So that's why in small little manageable bites, maybe you can help them start to have a paradigm shift so that they can help you protect themselves and everybody else around you. And also, I think going in and subscribing to Beyond Gold and Silver channel and the YouTube so that you start to look at the mantra in a different way and execute food, water, energy, security, barterability, wealth preservation, community, and shelter, because we are running out of time. It is that simple. I hope you see it. So if you haven't yet, make sure you subscribe, hit that bell. We'll let you know when we're going live. Leave us a comment, give us a thumbs up, and share. And at the end of the day, remember, financial shields, well, they're made of physical metals, gold and silver. Don't let these people have power over your entire life. It is not in your best interest. It will not serve you well. And until next we meet, please be safe out there. Bye-bye.